Welcome all. This is the bootcamp session number 2. We had one session 2 weeks ago. So some of you were in that session, so welcome back. Some of you were not in that session, so I will give you some context. Some of you must be wondering, why am I talking about a word like revolution in a kind of a finance CFO bootcamp? And what is this third revolution? How come we missed the first one and the second one? Well, this is like the Netflix mystery. We're going to sort of unravel some mystery today about FP&A as we talk about it, and how expanded FP&A has become, and what is this third revolution that we're going to spend some time on today. Just to let you know, I have a very interesting background, I think anyways. I'm an engineer, and then I did my finance degrees in McGill. And since then, I've been teaching at the Sprott School. I'm now the Chancellor Professor Emeritus. I started CR Group in 1989. And this presentation and other presentations I do, and the sessions I do for the CPA associations across the country, is based upon kind of my background in finance. But more importantly, all the consulting I've been doing for the last 30 years, almost around the world, and mostly in the corporate finance strategy, performance, value-based management world. Just to let you know, as I mentioned in the beginning, we really are a one-stop shop. And one-stop shop for driving performance across the entire organization. And we have clients around the world. And one of the tools for driving performance, of course, at least with our finance hat, is FP&A and CPM, and that's the area of discussion today. This is also contextual with the way how I view the finance world and our role to create value for the enterprise. And this is also relevant for today's conversation. And the thought really is that the first 3 levels allow us to build what I call a business information architecture. You know, the ERP system, some unique solutions we will have, project management firms, project module or a PPM platform. For those who have B2C or B2B with frequent interaction, a CRM platform. So first 3 really are what I call data collection, transaction reporting systems. Once the systems are in place and they are good systems, then we can start talking about how to leverage those systems to make some decisions. So my layer 4 in my world, or in our world, is now that you have data that's everywhere, because these 3 layers, they have multiple systems. How do we give to our leadership team information? So convert this data into information and visualization so that they can make decisions. So that's number 4. In the old days, we used to call this the business intelligence layer. Now we call it a visualization layer, or we call it a decision support system layer. Okay. Number 5 is managing people. More and more, COVID notwithstanding, everybody used to say, people are our assets. Well, accounting systems never thought about managing people as assets. We have, fixed assets on our balance sheet, property, plant, and equipment. We have depreciation and maintenance, but we never think about people as assets. We actually have them only in either cost of goods sold, direct labor, or in SG&A. But we don't think of them as assets. They are in the income statement, not on the balance sheet. And the question is, if they are our assets, how do we manage those? Because if we don't manage them, we are not going to perform. Number 6, maybe for today's discussion, is this corporate performance management layer, to say, now that we have the data, we have information from that data. We are also talking about how to motivate, retain, attract people. How do we deal with corporate performance management as a holistic way of looking at the business? And if we do that, then we can layer what I call the strategic layer, which will be balanced scorecard type thought processes, or executive compensation kind of a thought processes. How do we evaluate our firm's performance from a value perspective and from a stakeholder perspective? So that's kind of the context for how we think the office of the CFO should work and operate. They need to operate on all 7 levels and in equally efficient fashion. And because we are a technology enabling firm, for every one of these layers, we have our own platforms that we implement, and we are a Microsoft shop, so a lot of Microsoft stuff. We have our own platform called M-Perform for talent management. My point is we've been seeing this movie for the last 30 years as to how one can create value for the enterprise and the role of the CFO. So what's the agenda today? Agenda today is I really want us to expand the FP&A landscape. So that's my theme number 1. And number 2 is to look at these 3 revolutions, and I'll put that in the context, and start thinking about how can we start thinking outside in, and then we start thinking about inside out. So against those 2 themes, here is the content for today's session. I want to really briefly recap what I mentioned in bootcamp number 1, simply to situate bootcamp number 2, today's session. Then I would like to dive in right away to this, what I call expanding world of FP&A. And then within that world, I want to focus on the CPM, or the corporate performance management component of that, and kind of talk about these 3 revolutions, our current kind of, I call it 6-component CPM world. And then let's talk about what this 3rd revolution is all about. And rather than simply talking about it, I want to share with you a case study that will illustrate to you that this outside in thinking is now necessary, COVID or not COVID. Okay. And then how do we actually go about doing this from an action plan perspective? How do we get this agility in this new normal for our enterprise? And before we sort of go there and start acting, I think we need to also answer to sort of 7 fundamental questions, I call it, because that allows us to say or assess, do we have the capacity and or the capability to even act in this new world to get FP&A agility? So in the bootcamp 1, and again, I won't spend too much time on it, bootcamp 1, we talked about kind of 7 steps to what I call the CFO nirvana, from starting with the vision, moving up the value chain, revamp the planning and budgeting process. I put that in bold because that sets the context for today. Identify value creating growth, organic or inorganic. Build an ERM platform. Everybody wants CFOs now to manage enterprise risk. Number 6, again, I have bolded it here because it's the context for today as well. How can we become an information builder? How can we transform our enterprise digitally? Because everybody's asking about or talking about digital transformation. We'll spend more time on it in bootcamp number 3 about what does that even mean. But in a sense, what it means is, how are we leveraging technology to reduce what I call stakeholder friction? Employee as a stakeholder, supplier as a stakeholder, customer as a stakeholder, ESG folks as a stakeholder, as an example. Number 2 is, how do we provide insightful reporting and analytics, meaning kind of actionable dashboards? And then, of course, how do we design and link strategy and strategic maps that you must have to metrics so that we can start incentivizing the right folks, which is point number 7. Okay, so today, our focus is going to be more on number 3 and number 6 in that context. Other thing that I mentioned in bootcamp number 1 is that, and we need to do this really efficiently and effectively, because one thing we do not have as in the office of the CFO is we don't have time. We are under intense pressure. If the survey results are telling us that our ability to delegate is in peril, we have role stretch, everybody's coming to us. We have tension between kind of the old compliance world to the new world. Hey, move my enterprise from a strategic context with your finance hat. And then we have this notion that, and survey results are telling us that we don't seem to have the right capability and the capacity in our function. And that makes it really difficult to delegate, to have role stretch, and to manage this tension between old and new. So this evidence is we are under intense pressure. We need to transform. And let's talk about how we transform the FP&A function in this context of being under tremendous pressure. Other thing I always have been saying for last 15, 20 years is, if one wants to be a trusted advisor to the board, you need to go right. And go right requires agility. Go right requires us to understand strategic component of our business, understand business model, and understand data beyond the GL data that we talked about, budgets and actuals. Again, I mentioned that in Bootcamp 1. I don't want to spend too much time on that, given today is a different framework. So let me dive into kind of setting the context for today's session when we talk about this third revolution in FP&A, agility, and the new normal. One thing that is clear, and actually has been clear for many years, but because we are a conservative profession, we don't change that frequently. We need to radically change the planning, budgeting, and forecasting process. And I will give you a case study today that will tell you what I mean by this radical change in this planning, budgeting, forecasting process. We know, and I'm sure many of you are actually doing it, that planning, budgeting, and forecasting cannot start without a really good understanding about strategy, business model, and what is driving value for the enterprise. Number two is it should be triggered by material trends and events, not just based upon a calendar date. Okay, those organizations who still continue to focus on base budget, the budget we do in September, October, November for the coming calendar year or fiscal year, that cannot be a sacrosanct budget because the world is changing. We are having material trends and events that impact our business. So the base budget that we decide in October, November, December is almost obsolete by June, July, if not earlier. So how do we kind of start thinking about the role of base budget being less than what it had been in the past? Okay. Number three, not many organizations we know of or work with have done that, but this is the notion that start with the value chain where you put the customer first, then we look at what products and services you provide to those customers. Then we look at, let's call it our production model, whether it's services or manufacturing, sort of capacity planning for delivering those products and services to customers based upon our strategy, and then start budgeting for shared services that are going to support our ability to deliver these services and products in the front line to customers with products and services we provide. Okay. Number four is use technology. If organizations are small, Excel works wonderfully well. So if you have a 30, 40 people organization, or even maybe 50 people organization, Excel would be fine because you probably work together, not in the COVID world now, but you work together. You can just come across a other person in the corridor and we can talk about, hey, what's happening with our planning, budgeting, and forecasting. If you are larger than that, you have to use technology, and it's kind of well known now in the business. The last one I keep on saying, and we implement that in our clients and even including our own company, is we need to disassociate this budget process from setting bonuses and incentives based upon our actuals rather than the budget. Okay, we need to change this planning and budgeting and forecasting process radically. Again, the case study I'm going to share with you will tell you what I mean by radical change. And then we can start thinking about, oh my God, our world is getting more complex than we are accustomed to. We are asked to do way more things now than before. Part of it is also technology now allows us to do that. Before, we just couldn't do it given the time required to do it in old-fashioned paper and or Excel or whatever would not allow us to do this. But now CEOs and the board, at least for companies which are 100, 150, 200 people, companies rapidly growing, are asking that we need something that is going to give a single version of the truth. We are going to use the same platform for everything we do so that nobody can say these are my numbers versus these are your numbers. Or if things change, how can we rapidly adjust to these changing world? And of course, COVID to me is a systemic event. Yes, of course, it's creating pressure on us. However, it has also told us that we need to be now ready for potentially systemic events, which sometimes may not be macro events. It could be micro events or sector specific events. For example, the oil prices and its volatility and what that did to Calgary, as an example. Okay. What's happening with fintech, what is going to do it to the existing players, as an example. It's an event. Okay. Health tech, it's an event. That this event is going to change the way we operate at the industry level, at the vertical market level, and of course at the macroeconomic level, event like COVID. Hopefully we'll never see that again. And then I talked about in Bootcamp 1, you know what, if you want to kind of be this value-added model CFO, you need to do 7 steps. How you go about doing it: leverage core competency, ensure that you don't sacrifice long-term for today, because in finance, we are very cost conscious. And we know companies today who rapidly reduce their workforce for good reasons, but the way they did that was not conducive to same people coming back to work now that we are back in the post-COVID world, because they sacrifice the today for the long term, and it's hurting them. We have a client where same people have said, same people who worked with them are not coming back, despite of multiple calls and emails. They're saying, you should have done a better job of letting us go. We have already found alternative opportunity for us. Okay. Communication, we are so busy doing, we don't communicate. Stakeholder communication beyond just the board and just board and senior management. Use the right technology. Evaluate compensation structure, especially now. People want a customized compensation solution for them. Some people are working from home, some people are coming back to office, some people are doing hybrid work, and all of them are saying, give me a package that allows me to have not just money part, but work-life balance. Customize your insurance package for me for benefits, as an example. Meaning, nurturing the folks and showing one-to-one flexibility is going to be important going forward. Evidence is saying, or at least predictions are saying, that if your fiscal year is January to December, and if you are going to set bonuses in January and February and pay them out, watch out for the tsunami of resignations. I'm exaggerating doomsday scenario, but watch out for good people leaving, because in the last 2 years, they have figured out what is good for them and what is not good for them. Do they want to do what they have been doing for the last 10, 15, 20 years, or they need to change? Predictions are saying, or the surveys are saying, that March, April, May, for those companies who have fiscal year ending December and bonuses being given January, February, should be ready for this exodus of at some level. Okay, of course, opportunities to attract more people, obviously. That's the reverse of exodus. All right, so that's kind of setting the context for bootcamp number 1, as well as the context for bootcamp number 2. So what's the message for today's session? Today's session, really 2 messages. First is traditional thinking about what FP&A is, which is traditionally, and I'm sure you have expanded in your own company, FP&A role, it's not only about budgets to actuals, and it's not only about consolidation reporting. It's way more than that, and we need to expand the FP&A function, FP&A role, and how do we bring information to the management team and to the board and external stakeholders. And number 2, which is another message and a use case, is we need to really rethink CPM agility. How do we do planning, budgeting, forecasting, and managing performance in a very agile way so that we are ready for what I call the systemic events where capacity planning agility is extremely important. So let's step back and kind of start thinking about our FP&A world. And many of you are familiar with this, are in it, do it every day, every month, every quarter. If you would have gone back, 20, 30 years ago, number one was kind of what we wanted from our finance books, because technology did not exist. We couldn't even close the books till, T15 or T18. Okay? So, just give me sort of traditional stuff. Give me the P&L, give me the balance sheet, give me cash flows, and, compare MTD, YTD actuals against previous year, same month, or against budgets, or against forecasts. Do some common sense analysis that tells me relative to sales, how are we doing? And, if you're really a great CFO, educate us and provide to us some information on financial metrics. All kinds of metrics that we know in finance exist, and educate the leadership team on financial historical performance about the business. As we started expanding, and when economy or the competition started becoming dynamic, this static world of, let me tell you what happened last month on T15 or T20 of this month, was no longer sufficient for many organizations. Then they went to CFO and said to the CFO, provide to me what is causing this variance? What is causing these actuals? How are we even budgeting correctly? So talk about value drivers with me and start reporting on value drivers. Some could be operational drivers that are not in the income statement or balance sheet, and some could be completely non-financial metrics, including, for example, customer satisfaction. Okay. The revolution also started in the early 90s and early 2000, that this reporting for value drivers should not be without some kind of a framework, overarching framework, like balanced scorecard or strategy maps or whatever framework we use for strategic thinking and strategic planning. Berkshire Hathaways of the world, or Dynards of the world, also started talking about this notion of role of the CFO is to ensure effective CapEx allocation and execution. Okay, so we started talking about, are we allocating capital correctly, knowing that capital has a cost. There's a capital charge required by the bondholders and the shareholders to have a demanded required rate of return, given they have alternative investment opportunities. And then, of course, hey, that's great. You're telling me our budget to actuals are doing good, but how do we know compared to peers, how are we doing? Again, pre-90, data did not exist. Post-90, data exists. We can now get data on peers, may not be for privately held companies necessarily, but publicly listed companies, easy to get, easy to compare. Okay, so the world expanded from the traditional to the value drivers. Of course, then SOX happened, and we now started having regulators telling us what we must report and multiple ways of reporting. So now we have this notion of what I call reconciliation across 4 books: a financial reporting book, IFRS and GAAP, spelling error, a management reporting book to manage the business, tax reporting, especially if you're multinationals, and you know what's happening these days about this minimum global tax initiative that is coming about. How are we reporting for taxes? Again, the smaller you are, not a big deal. Larger you are, multi-currency, multinational, you are a fairly big deal. Okay. And the last one, of course, is performance reporting, kind of a balance of number 2 and number 1 coming into this reconciliation for using the numbers that allow us to generate performance reporting as opposed to financial reporting. The world expanded further. World expanded to say, we now not only have just simple budgets, but we need to have rolling forecast. Okay? We need to link it to planning. We need to link it to strategy. So improve our CPM platform. Again, we'll talk a little bit about that. Enterprise risk management came to the office of the CFO. The 6th revolution came out from what I call the strategic planning revolution that we started in late 90s, mid 90s, late 90s, to say, one of the things that impacts many organizations is their inability to execute strategy because we do not have a very good understanding about tracking, monitoring, measuring, and holding people accountable for all the initiatives and the projects and the goals and the deliverables that we must have set or expected in our strategic planning session. Okay? And number 7 now is fairly new, at least started 3 to 4 years ago, but has received tremendous momentum, especially in the last 18 months, is this external stakeholder reporting for organizations where stakeholders and shareholders and active shareholders are asking about ESG reporting, asking about carbon footprint, asking about what initiatives you are taking for the key stakeholders, report on them. So external stakeholder reporting. So we've gone from a very cozy, nice, traditional world of, let me tell you what happened last month against a budget that was fixed in October, November of last year, and I'm in July, I'm still reporting against them, all the way to external stakeholder reporting. So we have clients where in the beginning, the board deck, a PowerPoint deck, if you want to think about it, was like 10 to 12 pages. Now we are saying board decks of 60, 70 slides, because we are trying to present to them a much more holistic view of the business, not just focused on P&L, balance sheet, and cash flow. Okay? So will that change? Of course, that means more work, and we are already under pressure. So this is not really good news for us unless we really want to make it extremely efficient, use the technology to deliver this really quickly. If we then narrow the focus even further and only focus on the CPM component of our business or our function, we've had at least seen 2 revolutions. And these revolutions for me have really come from technology vendors pushing us to use the technology to ease our workload. The first revolution, it really what I call Excel revolution or the Lotus evolution, okay? That we started with a worksheet that allow us to do something beyond the slide rules and the calculators. And worksheets went to workbooks, and workbooks led to all kinds of functions that we kind of live by these days in finance. Okay? We started using Excel because it became a norm, 90% of the case, or now maybe some Google Sheets you may be using, to now display these rows and columns to the senior management through a briefing book, graph charts and slicers and power pivots and now Power BI and what have you. However, people knew that this Excel world, if you have multiple contributors to our planning and budgeting and forecasting process, is not going to give the efficiency we need because it's time intensive, especially those companies who run through 2, 3, 4 versions of their budget. They're error prone because it's Excel. They're non-collaborative because we don't have a distributed way of using Excel given security constraints or confidentiality constraints. They're error bound because they're dependent upon what I call internally, maybe that's not a good word, dependent upon Excel jockeys that we have in the corporation who love Excel and play with it all the time, but we are never sure how to trace errors, especially with multiple linked worksheets. And by definition, this process is not agile. So in the world where agility is required, this post-revolution-based planning and forecasting and budgeting models are simply not going to work. Then in 2010, 2011, around that time, came the second revolution. The second revolution, again, from my perspective, brought out by technology vendors who said, I see a pain here, this post-revolution pain, let me solve it by my technology platforms. Okay, so organizations which are mid-size to large size started moving away from Excel to corporate performance management, and Hyperion was kind of one of the major tools that came about. Cognos in Ottawa also created a platform to do a CPM through technology. That did 3 things. It provided flexible, collaborative, controllable, workflow-based set of solutions. So we in finance could track where it is at and have a really good way of approving, rejecting version 1 of the budget very quickly as opposed to emails. Okay. Number 2, these platforms allowed us to cater to both parts, the financial reporting part as well as the planning and budgeting part. And at the later half of the second revolution, we started talking about cloud-based, what I call always active, always on, 24/7, anywhere, anytime platforms. So one could have just stopped because it looks like the second revolution provides us kind of everything we need. Well, not so. Clearly, this second revolution allowed us to be systematic about it. We can build a revenue model, and we can go as granular as we can go because we are liberated from Excel. We don't need to worry about limitations of Excel. At least in the old days, we even had limitations on number of rows and number of columns. Now we don't as much, but again, we cannot go as granular as we wanted to. Platforms allow us to do that now. And we can get data from multiple systems, which is a boon to us, especially if you have a CRM to manage your sales forecast and a costing and project module to deliver your services, as an example, or a manufacturing module to deliver your manufactured products. Okay? Then we started building at that granular level the bill of materials, including variable labor, overhead, and material. We build production models or procurement models or driver-based models. Okay. Clearly, we can now do gross margin modeling a lot more effectively than before. And then we started talking about third component, what we call workforce planning, SG&A, sales and marketing, shared services planning. Number 4, OPEX. Number 5, CAPEX. And number 6, for some companies where cost allocation was important to provide a line of sight, or what I sometimes call fully loaded cost of products, services, projects, and customers. Okay. So these CPM platforms in the second revolution allowed us to deal with all these 6 components at any level of granularity that Excel simply could not give it to us. So we say, well, what's wrong with this 6 component second revolution model? Seems to do everything, so just stop. And we are in nirvana already. Well, nothing is always good. These models are inside out and stop, or what I call silo models today. And we need to have models that are outside in. Okay? And I call this third revolution. And why this third revolution is important is really because this material event that we have seen and suddenly opened up our eyes that, hey, business is not as usual, world is changing too rapidly. Me in the finance function should be ready to provide the leadership team the kind of information they want so that they can take agile, immediate decisions and also know the cost and the benefit and the value of those decisions before they take those decisions. Well, it's easier for us to say that, but the question is this actually real? So let me spend 3 minutes on this, what I call case study that shows you a company which had phenomenally good second generation model, or the modeling of the second revolution type, was not sufficient for them to actually run the business as the world changed radically on them. So what was the pre-COVID state for this firm? I've changed some minor things here and there because just for illustrative purposes, 5 business lines, 15 locations, and clients in 5 countries. So global organization, okay, professional services organization, so no manufacturing here, okay. We have manufacturing clients, distribution clients, same process, okay. They delivered both managed and non-managed services, non-managed meaning staff augmentation, had an elegant second generation model with what they thought was required degree of granularity, okay. They had all kinds of systems. They had a CRM system where they had probabilistic pipeline kind of forecasting. They had a project management system from an ERP. They had different types of projects, fixed price, milestone, time and expense, a standard global professional services firm. Okay. The cost model leveraged a rate card and a consultant by type, by project. Okay. allowed them to calculate quickly gross and net margin calculations with standard and fully loaded rate, on and on and on and on. Okay, and they were in the process, and that may be what happened in real world, is that they're in the process of building what I call capacity planning and scheduling as the next step in their FP&A model. FP&A did, monthly, quarterly forecast based upon the CRM pipeline, based upon who is on the bench, who is not on the bench, and was able to create scenarios to tell the CEO and the managing partners what the impact of changes in forecast would be on the forward-looking income statement and cash flow and collections, which they link to the AR module of the ERP. So I think if you were to ask the managing partners pre-COVID state about their score on the CPM platform that the finance function or the CFO was delivering to them, I think the score would have been 7.58, 8.59, very close to, hey, we got really a good CPM platform here. Then, of course, the world changed and COVID happened. Well, the COVID happened not from a perspective of another systemic event. Leadership team required extreme agility to respond to changes due to COVID. And they started asking all kinds of questions to the CFO. They started saying, I really want you to link ongoing and pipeline services and projects to specific teams, because we may want to do a global optimization of delivering of services, because suddenly I don't have to go to the client site because there is nobody at the client site. So now I can deliver services in country A from country B resources because nobody has to travel anywhere. So now I want to look at this, it's called cross-country metrics of teams delivering projects to clients across the globe in one view. Okay. Number two, we really want to categorize projects based upon what can be delivered remote, what have to be on-site, because these on-site delivery projects are going to be under threat because the clients are not on-site. Okay. Well, that's going to tell us which individual can be, let's call it furloughed, who we must keep on the bench, and we also now start talking about our financial strength and flexibility of landlords from whom we rent office and office properties, because these are fixed costs. We may not now need those fixed costs because our team can work remotely. Okay. Number three, which I thought the CEO was extremely forward-looking. He said, guys, this is all great, but you're talking about inside out. You're talking about what we are doing. I want us to tell me outside in. Do we know the elasticity of the customer's business to COVID that would impact on their demand on our services? And now we need to model that demand in our CPM platform. Okay. Nobody ever thought, given the sort of clients' financial strength in the pre-COVID world, because they were not working with small clients, they were working with large clients. Okay. Number four, that required them, and they did not have the data to rank or rate or score customers based upon customers' financial strength to withstand this event and continue the work with us, both the work in progress and work that we expected would happen, 6 months from now, 8 months from now, 12 months from now. And categorization along the same lines of thinking of projects that we consider are to be mission critical, semi-critical, nice to have from the customer's lens. Whether the SOW was signed or not was immaterial, because customers could invoke this, called materiality clause, that world has changed, SOWs are no longer applicable. Okay, both from a managed services perspective versus a non-managed services perspective. Just think about this slide and start thinking about this slide's relation with second generation FP&A models. This data was never coded. In the CPM platform, none of these data points existed to flex the model. We did not have a project typology that allows us to say, this is a mission critical project, this is a semi-critical project, this can be delivered remotely, this has to be delivered on site, this is critical to the customer's business, this customer is very good financial strength, actually would prosper in COVID as opposed to not prosper in COVID. No such data existed because our model was inside out, our model was not outside in. Okay, so my point to you is that this new world allows us to now think about outside in as opposed to inside out. So what are the lessons learned from our work with these types of clients, and including our own company, by the way, is that we require to bring in a large amount of multi-dimensional data points that we never had before from an outside in perspective on key stakeholders. Okay, we need to have kind of an end-to-end linkage between customer's business. So we need to know customers' customers and how that impacts us. Number two, we need to make changes to our master records in the ERP system. Even maybe dimensions have to change. Okay. Number three, we need to bring in more and more data outside ERP system that we have in our model. More knowledge about substituted products, more knowledge about customers of our customers. Number four, if the company has built concepts like, balanced scorecard strategy maps, we need to now look at dimensions that are required in these models to present to our senior management. Number five, various top-down adjustments are required now because we now have more outside-in data. Number six, this FP&A world is also going to change, especially now given what's happening on the tax side, for multi-subsidiary, multi-country, multi-currency world from a consolidation perspective. And these models now are going to require us to cater to reporting needs of multiple stakeholders. This particular company, this wasn't a big issue for them in the sense of carbon footprint or ESG or banks, because it's a professional services firm, never had any debt, never had to worry about environmental footprints, except they used to keep track of number of miles traveled by plane, by train, by bus, by car, by employees, just to keep track of the carbon footprint. Okay, so yes, they had some data, but it wasn't central to running the business. Now, for certain companies, it may be central to run the business. But before we kind of start this world of tech action, we have to ask some questions to ourselves. And answer to some questions would be yes, answer to some questions would be no. First is, if you are big enough and doing first generation world, maybe you want to move to at least the second generation. Number two, does your business demand you to be agile? If you are in a non-competition monopoly business where nothing happens to you, maybe you don't have to be agile. Okay. Number three, if we want to be agile, if we want to move away from first generation to second generation to third generation, do we have the capability and the capacity within our team to go from point A to point B? Because change management, we know, is not that easy. Okay. Number four, in the finance function, do we even understand the knowledge of the business? I mean, just think about those people who had supply chain from China to LA to Toronto to Ottawa. It's a radical change for both the time delay on the containers coming from Japan or China or Korea to LA, but also freight cost and time delay. So we have to worry about that. Okay? If we had the knowledge of the business, we could have at least modeled this in this third generation CPM tools. Okay. Number four, what do we need to do to satisfy key stakeholders from 1 to 140? Sorry, number five. Number six is, what extensions of CPM reporting we believe would improve our decision-making capabilities? And number seven is, can we now use these platforms to better equip us and equip our leadership team to identify where the value gain is going to occur and where our value losses are going to occur? And if we do all that, and answer to these questions is yes, yes, and yes, then we can go back here and say, do we require any of this? And if it is, what action items we need to undertake and when we want to undertake those.
Hi, Vijay. Yes, I do have a few questions. The first one being that you talked about traditional FP&A, but in our world, we don't produce all 7 components. Why do we need all 7?
Sorry, I must have said it wrongly then. All I'm saying is that not every company may need all 7, but some of you would need all 7. For example, it doesn't matter how small you are these days, we have to produce some notes, some reporting on enterprise risk. Okay? It's just part of our business. Every survey that I have seen in the last 5, 6, 7 years, second most important requirement from the finance function is enterprise risk management. In the older days, we thought enterprise risk simply as technology risk or cyber risk, but now people talk about enterprise risk in general. So really, I'm not preaching that every company should have all 7 components in the FP&A. Just depends upon what type of a company you are and what the needs of the leadership team are. So I didn't say every company should have all 7. If I said that implicitly or explicitly, I was wrong.
All right, great, thank you. The next question is, I was always wondering where business intelligence fits and where CPM starts. Any comments?
If you would have gone to Gartner, I would say 5, 6 years ago, the Gartner's Magic Quadrant. The Gartner's Magic Quadrant had a CPM quadrant and a BI quadrant, which was okay because BI typically we used to think about more granular the data. It's more BI reporting. Sales by product, by customer, by channel, by salesperson, by customer type, by vertical markets. Think about multi-dimensional data that we require for reporting purposes. As the second revolution started in the CPM world, that gave us ability to budget or forecast at that granularity if required. So this data started coming into CPM platforms. So now if you think about this CPM BI, this world is kind of converging at the same time. However, there is still big distinction. Example, technology toolkits like Alteryx or Tableau or Power BI are still what we call business intelligence visualization world. They are not allowing us to do flexing of any models, okay? Some CPM platforms are purely planning and budgeting, they don't do BI. The new platforms do both. So the CPM BI world is now converging, which wasn't the case, I would say almost 5 years ago, if I'm not mistaken. Yeah, 5 to 6 years ago. So yeah, CPM BI kind of are converging now. BI is more analytics, CPM is more forecasting, but both have come together.
All right, so we just have one final question. How large or what type a company should be for the third revolution?
I don't think large may be the right parameter. How complex the firm is and how dynamic it is, and whether that firm requires to change the business model on a dime. And if that's not the case, maybe some components of the third revolution may not be required, meaning one does not have to have so much granular data coming from outside the ERP system or the CRM system that the company maintains. But if the world is complex and is dynamic, and an event may change your company's fortunes on a dime, then it doesn't matter whether you're small or not. If you want to prosper or on the other hand not die, you need to invest in the third revolution or third generation CPM platforms, not platforms per se, third generation of data that is into your CPM platform. Okay, so it's I mean, of course, large by definition are complex, but we know some small companies are also complex, and the CEO is extremely forward-looking, or the CFO. And they are building these kinds of models to know a lot more about data that exists outside their ecosystem than within their ecosystem.
All right, thank you so much, Vijay. That's all the questions we have.
Thank you very much, guys. If you have any questions, pass it on. I'm around. I do this for a living from a teaching, training, webinar perspective, from consulting perspective. So if anything that you come across today that you have questions, comments, observations. So thank you very much for attending. Have a great day and a great week.